Bitcoin, I think, is definitely clearly undervalued right now. We have seen that on the day when Trump tweeted that buy low because we're attractive, Nasdaq rallied 12%. We're talking about trillions of dollars of wealth added.
What's shifted though is the narrative is not only crypto's volatile, it's also the traditional markets have become volatile. So how do you handle all of that volatility? Today we're here with Dr. Nagendra Bharatula from G20. G20 is a big market maker, globally based and headquartered in Switzerland, but has offices in London, in New York, in the US, and Asia, so everywhere. And welcome here today. So the big question is, what's the best strategy that you use to identify undervalued tokens in crypto?
Thank you, Stefan. A pleasure to be here on this podcast. I think I always like 100% or more than 70 or 80% unlocked tokens in general to identify the best possible ones. So it would be not the new tokens, but already established tokens that have survived. Obviously, Bitcoin, I think, is definitely clearly undervalued right now, given where the future interest rates would be, given how volatile given overall market conditions, how just gold market cap has risen almost near to $20 trillion. Today, probably a little bit lower now, given the rhetoric from the White House that they don't want to see Jerome Powell leaving the position as Fed chair, but also they're very open to find a friendly solution towards trade wars. So otherwise, Bitcoin, we are around 90,000, 94. So that's almost around $1.9 trillion. So you're looking at 10 times more possibility here for catching up with the gold market cap in the medium or very long term. So Bitcoin is definitely undervalued. And this cycle last year, big winner was Solana, which has been doing poorly since the big unlock happened. So Solana has been below 100, now trading around 130, 140. Definitely, the Solana ecosystem has been producing more revenues than Ethereum. So definitely it's very undervalued compared to where it should be, the intrinsic value. Ethereum, the dog of this cycle, given a lot of problems that the narrative and the issues which are very well known to everybody, is also undervalued because ETH BTC ratio is completely out of sync. So there is a calculation which ETH should be about 10,000 if it have everything done correctly. So you can't short ETH because it's already shorted so much by almost everybody. So you have pairs that traded in the market, ETH BTC, ETH Sol, ETH SUI. So everybody is kind of very, very bearish on ETH. So this is a very, very good signal for building a long-term positioning. And of course, given how powerful the bigger capital markets are, the entire narrative is driven from the story of the US administration policies, the bigger capital markets, and very heavily correlated there. And that's what, it's driving the story. Even I would say, as we had a scenario where S&P and Nasdaq were down 2.5% to 3%, Bitcoin up 3%. This is mainly because markets were afraid that the Federal Reserve may not have independence. So they went into an asset where they find it very clean, which is gold, which is Swiss franc, yen, and then German government bonds, and then Bitcoin as well. So I think it's also the story of the bigger markets is driving the Bitcoin story. And today we saw another rally where they said, look, we're going to basically do really nothing. We're going to find a trade war. So the story is risk on. So you have Nasdaq up 4%, S&P up 3.5% or 3%. Bitcoin also rallied. So even though the rally looks going higher, but the narrative is very different.
And what's shifted though is the narrative is not only crypto's volatile, it's also the traditional markets have become volatile. So how do you handle all of that volatility?
It's really difficult. So we have seen that on the day when Trump tweeted that buy low because we're attractive, Nasdaq rallied 12%. We're talking about trillions of dollars of wealth added.
Right?
So I must say, April has been a very challenging month in general for somebody like G20, which trades also normal currencies, gold, and also largely crypto as well. So it's very challenging. Our team has been holding up pretty well.
Yeah.
They have been working really, really hard. And so it's since January, President Trump has taken over, markets have been on very volatile. So,
yeah, and so which asset really stands out for you, given you've got the different volatilities? You've already highlighted Bitcoin, Ethereum, Solana, and gold, right, and Swiss franc. What asset do you really sort of cherish?
So
the
I think
most
on the
in your
currency side, we
Yeah.
really see Swiss franc as a huge standout
Yeah.
among all the currencies, because Swiss franc is up almost between 11 and 12% against dollar.
Wow.
Which is phenomenal. And Swiss National Bank has been cutting the rate. So if you really think about it, it's completely like crazy that the kind of rally that we have seen in Swiss franc has seen a relentless bid among the Swiss assets.
Yeah.
And then gold is a huge standout.
Yeah.
I mean, we haven't seen gold has seen, if you see the chart,
it's
it's
all-time
parabolic.
high, yeah.
You see the asset is a over $10 trillion asset, reaching to 20 trillion now. So that's a clear huge standout this year among all assets, even at this point outperforming Bitcoin.
Yeah.
And definitely Bitcoin is also, I would say, a standout because it really struggled in the very early, where people had to deleverage and reduce their positioning, and then that affected Bitcoin positioning. And now people are coming back into that, playing as an asset that could be a play on the new U.S. administration friendly policies.
Yeah.
At the same time, an independence from any mistakes that administration may do, like independence of Federal Reserve. Also a rally towards expansion of the M2 money base. We thought it may be kind of inflationary. Inflation in the past, when bond yields went high, Bitcoin really didn't perform well. It came down. But I think what we are seeing is a maturity of the cycle. The flow is very different this time, because now I think most of the big hedge funds, most of the macro names do trade Bitcoin. So it has a very high correlation to typical markets. It's not anymore moving based on, just crypto. So it's a really Bitcoin as a standout compared to all other assets in the crypto.
Yeah, you have a great perspective, right? So you've come in from the foreign exchange category, from the fiat trading markets, and now crypto markets. Where do you get all your news, right? I mean, you have all those insights. What are your top sources for information?
So I think we obviously we have various internal models to look at a lot of leading indicators on the currency side. Also on the interest rate side, also on the bond side, which we look at. So on the headline news, obviously we follow, as you know, that Twitter, and also President Trump's own social media for the post. We're based in Switzerland, but also we have offices across, so we kind of coordinate there. On the crypto, I think we follow various protocols, their own Twitter handles, their own news, and also many well-known media sources and some of the names that we follow. I think it's very also important where there's a lot of not so correct news these days, which led to rally in the markets. So it's really important to see, did Scott Bessent really meant that? Did President Trump really said it? It's very important to verify these days because a tweet can move the entire market. So I think that's why it has become a really headline-driven market. So we use many paid sources as well, not just a free media. I think for people that would really like to follow the headlines, I think besides Twitter, you have Masari Research is quite good. Blockworks related media is quite good. Also, the Block is quite good. And I would say any major media that is credible enough, I think you can basically look into that. And also you have to find your own sources, but always take the recommendations in the Twitter with a pinch of salt, basically, because people may be talking their own book, or maybe they are just trying to get you into the trade that they want to sell. So you have to be really careful on whether you follow anybody. Anybody that's making a recommendation is having a conviction. So how much this is correct, how much is the entry and exit size. So you have to be very careful when you follow people to take a decision. And I would say don't trust anybody.
So always verify, have multiple sources and identify key people and individuals or protocols on Twitter before you actually take it into account.
That's right as well. And we use also Bloomberg, Reuters, various other live data feeds and news for the capital markets as well. For the crypto, you use the directly news from the protocols or anything. And I think in crypto, unfortunately, rumors travel pretty fast on anything. So any news you must really verify before you actually make a judgment out of it. Yeah.
So how do you feel about Truth Social, given that Trump's presence
pretty important.
There is pretty, now it's first there,
So I think it's
right?
very important.
Yeah.
So we do follow it very carefully because, at the end of the day, it's a very, very important handle. Yeah. So there is also a Truth Social repost from that. Yes. But it's better to directly follow the Truth post and then the other administration officials like Litnick and Besant and also any data from the Federal Reserve, you must follow this very carefully. Yeah.
And then how do you view Substack? Substack is ultimately a subscription-based
absolutely.
newsletter.
So we do use Substack for certain news information as well. So I would say that if you like that, definitely worth following Substack as well.
Yeah. And then, what do you view? I mean, you've sort of alluded to it now, right? Where Bitcoin is 1.5 trillion. Gold is 20 trillion. Close to 2 trillion. So you see a lot of upside. Is from an overall perspective in crypto, do you see it's more bargain right now or more sort of we're on a nice trajectory upwards aligned with other asset classes that are moving upwards?
Yeah, I think, in crypto, the valuations are not determined by the VCs or the founders. Yeah. It is mostly determined by a buying and selling flows that would be largely dictate the trajectory of the token price, basically. Yep. So how does this come in play? So mostly, if you see, Bitcoin has access to very wide distribution through ETFs. It also has revenues. It also has the largest community it has. And then you have Solana and you have Ethereum. Yep. They have some of the distribution channels. Solana ETFs are just getting approved. They also have, the ecosystem makes revenue, so you can price it. But a lot of protocols actually don't make any money. So they're completely based on speculation, future expected returns, or certain buybacks or etc. So you have to be very careful to put your hard-earned money because it's very, very difficult to make the money in the very long term because you could make a lot 3x, 4x, but you may be losing all the money in one go. So I think your allocation need to be market cap weighted. I think if you have $100, so you should look at what is the most trended tokens, and then I would definitely avoid exchange tokens because exchange tokens are very much, unless you're really trading on the exchange, you're looking for a discount, you shouldn't really be buying an exchange token because this is actually an equity play. This has been, we have seen with the FTX case how FTT went to almost virtually no value from some value. So that should be very, very important. I'm not again here bearish on any exchange token. They may be excellent investments if you get in the right time, but you may not know when there is a selling or anything. Often these exchange tokens are not widely listed on every other platform. They are listed on their own exchange, right? So I think then if you have many exchanges have it. So I think you should be very, very careful to have a very large position in your portfolio. So I would say you should have pretty decent sized position, over 60% in Bitcoin. You could have up to 10% on Solana, and then between 1 and 5% on Ethereum, and then other alts you can have a smaller exposure there. But however, people are always different. People want to actually have a lot of returns very quickly. Some like meme coins, some like that. So you really need to risk only what you can lose in some of these tokens because if there are no flows in terms of who actually are buyers, if the insiders are really selling, I think that's a pretty negative signal. At the same time, institutions are only buying most liquid, fully distributed, revenue generating or potential to revenue generating tokens, like really serious names. So they're not buying your low, small cap, you're only 15 to 20% vested. And then you are doing an OTC deal with a very large discount. This could be attractive to some people, but pure liquid tokens are the name of the game in this cycle at least. So some of the founders actually are avoiding the unlock selling pressure by making deals with various names, and then they offer very large discount. And then the big question we get asked is like, what should be the discount be priced? I would say crypto typically is very volatile. So I would say 30% annualized volatility is how much discount you should get.
Okay.
Which means if you have 2 years, you should get 70 to 80% discount because you don't
Okay.
even know how much token can go lower. So you're
Yep.
taking a risk for being locked for the long time. So a 60% discount may not be a big discount too. So that's how you should really price.
Interesting.
Of course, this is not in the interest of the founder. So they want to always price at lower.
Yeah.
So if you catch this discount at a very attractive level that the market cycle goes higher, it may be good, but you can hedge with the perps, etc. That has obviously certain costs.
Yeah.
But that's one thing to do. But this is more, I would say, for institutions rather than for individuals.
Yeah. So we just saw with the Mantra hack, right?
Yeah.
I mean, one of the big CoffeeZilla did the interview with JP Mullen, who's the founder of Mantra, and CoffeeZilla was sort of the analyst or more the journalist, let's put it like that. And he was talking about these buyback strategies, right? And when Mantra did a big OTC deal, I mean, not that big, I think it was like a couple of $1 million, and ultimately they gave a 50% discount, but for a 2-year lockup, right? But what you're saying is actually that 60% is sort of somewhat normal for an OTC deal.
The discount that
because you're locked up for 2 years, right?
So the discount they have done is very fair, which is nothing out of extraordinary. I think Mantra is a very unfortunate case. It looks like to me, from what we know, is there is a unfortunate leveraged based trade unwinds that happened and people got liquidated. That has led to a big correction. It seems, if you take the founder has come up very strongly and has said, look, we're going to burn all the team tokens now. They haven't done anything. So we just have to wait and see how they're going to really burn the tokens and then how the community will react to that and all. So this is a very unfortunate event and really sympathy to people who may have got hurt in this thing. And I think the founders are trying to do everything there. So it's very important for people to do. That's why if you have 100% of your wealth as a retail investor in Mantra, you may have been hurt. We don't know if the token would go back higher there or not, and at what part of the cycle you got into the project. So if you have Mantra as part of your 10 tokens or 15, you are likely, if it dropped as it dropped, your likely loss is limited. So that's why I think you need to be diversified in crypto. You can't bet everything on one token because unfortunate things can happen. And that's why I say people, you should own physical instead of, unless you are really a professional, sincere trader in front of the screens, you shouldn't be trading perpetual futures. You shouldn't be leverage trading. So if you're a buy and hold, you don't have... Be
careful, guys.
So you have to be very careful on leverage. Because leverage ratios and leverage margins can be changed by exchanges, and that may lead to liquidations.
But do the exchanges frequently change the leverage, the LTVs, associate loan to value ratios?
I mean, often, I think very established, well-known names, they don't change. But
these are like Binance and OKX, right? Those are big names, right?
They're pretty normally don't see changes. I mean, it's changing the leverage ratios, asking for more collateral is not uncommon, even in the traditional market. So recently, everybody was asking for Mag 7, for equities, for gold, higher margin. So when you actually need to post, let's say you have 3 assets, you have gold, equities, and crypto, and probably bonds. I think then if you have to post more collateral for gold and stocks, you sell the bonds basically. And that's how the sell-off comes in the assets. There was a day when gold was also down because people were selling gold to fund equity margining. So that's why I think some of these days it can be quite confusing, but it's mainly due to deleveraging, is where in the first leg of the cycle, Bitcoin was sold off. Not necessarily people were really... because it was very liquid, so you sell the most liquid investment. So again, I reiterate what I have been always saying is that if you're trading with the leverage, you have to be really there in front of the screen and manage your risk properly. If you're not trading with the leverage, you have the luxury of holding the token for a long term. So if you really believe in a project, you really like it, you like the community, you want to be part of the community, buy the token, but don't leverage it in terms of the trading. So it's totally different. Having the physical token is very different. You stake it or you hold it is very different to having a position on the token. So these two are totally different animals completely. So it's not that you don't own a Bitcoin if you have a futures on a Bitcoin position, which is most likely you make money or you may get liquidated. So people need to differentiate between these two, and this is a very important thing in your own portfolio risk management.
Yeah, and I think you come from academia. You've always had a very macro perspective to investment, right? You've always taken a global perspective to investments, and now you've added into there all these different asset classes, right? You've got currencies, you've got commodities, you've got shares and equities, and now you have crypto as an asset class. And you've also got a lot of insight into futures, right? So into hedging, into protection, which is actually an insurance model, right? And so if you look at Bitcoin futures, how do they work? I mean, ultimately, I'm pricing a future of Bitcoin in 6 months' time.
Yeah.
So basically, I can leverage against that. How does explain maybe how to us?
Sure. The future is like basically futures are very normal instruments in traditional finance. Yeah. You have S&P futures that are traded around the clock before the market really opens. Yeah. So Nasdaq futures are also there. E-mini futures of S&P are the most liquid and popular instrument. You have futures on treasuries and gold and
all the other commodities.
So same way you also have Bitcoin futures, and futures are classified into regulated and unregulated futures, and continuous and discontinuous futures. Now we have CME, which is the regulated venue, where you have Bitcoin and Ethereum futures that are traded there. The marginings are different to each venue. You also have venues like Binance that offer futures as well, perpetual futures, which means they trade continuously, right? Like they can have a settlement in a much shorter period than CME futures. So it's basically an expression of how the asset will trade without owning the underlying. So that's what you are doing. So if you're trading Bitcoin futures on CME, you are not really owning the Bitcoin. You are expressing the price as an expectancy from the spot convergence. And if you have a positive funding cost, it trades at a premium. If you have a negative funding cost, it trades at a diversion from the spot value. And futures are often can offer a very attractive leverage. So you can have a very large position with a lower amount of the capital base. It's basically expressing your direction using a lower capital base, because if you want to buy a Bitcoin, you really have to physically like transfer or pay $94,000 and then you have one Bitcoin. But you can have much larger positions, say 10 Bitcoins or 5 Bitcoin position with one contract or 10, using lower capital. So you don't even need
the full
bigger
90,000.
amount, the bigger amount, and then you can trade that. That's what it allows. However, the risk is, again, like I said, if it moves a lot, you may get liquidated off your position. You don't own it. So futures trading always comes with a lot of risk management. So typically, it's very attractive these days for people to do. You have a lot of venues, and we have also seen some of the projects, offering a combination of spot and futures with unified single margin account. That's very attractive on the offshore venues with the Binance International, etc., or OKX, etc. They offer it. CME offers only futures itself. So I think these are very basic financial instruments that have been existing in the traditional finance for a very, very long time.
Very long time. And an option is basically I have the right but not the obligation to buy an asset, right? And I'm paying at a given price at a given point in time.
You're talking about options.
Options, right?
That's right. Yeah. So options are basically used also again by corporates to hedge their future liabilities. So let's say you're a Swiss company and you're exporting into United States, you have to hedge your dollar Swiss franc volatility risk.
So we'll come to that afterwards.
Because let's say you're actually a Swiss company making $100 million in US, and you have now a $12 million less money because dollar Swiss franc moved 12% in the favor of Swiss franc, and then you got to hedge out this risk. So it's very, corporates regularly do hedging using options, and then very popular. There are a lot of structures in options, vanilla and exotic options. Vanilla options are calls, puts, risk reversals, covered calls, covered puts, straddles, triangles, condors, collars. You have many structures, and very common structures are covered calls, covered puts, and risk reversals are pretty used by a lot of corporates, and they trade with the investment banks, the big banks often. I think in crypto, Bitcoin and Ethereum has a lot of options market, and also other options from Solana, XRP are also getting very popular. So this is an area where in foreign exchange, the options market is much larger than the spot market, and spot market trades really between $6 and $7 trillion a day, very deeply liquid. And so I think if crypto to grow bigger, eventually one day crypto would trade a daily spot between $6 and $7 trillion, and options market becomes a huge part of that.
It will be a huge part of that.
So this is mostly capital efficiency, very common. Just to quote a number, S&P 500 zero-day options constitute 40% of the daily option volume, even up to 50% someday. So these are the options that expire on the same day on S&P 500, very popular with retail traders on S&P. So these kind of instruments will become more and more popular as the market continues to grow and more people join the speculation of the crypto industry.
So zero-day options. I'm betting this morning whether at the end of the day the S&P will be up or down.
Absolutely.
It's like a binary option pretty much,
and
right?
this is why also if you see S&P is going through huge swings before it actually reaches the
end of the day.
At the end of the day is also because of the zero-day options, and that probably the dealers are trading their position, retail is trading their position. So it's a very attractive way now, and it's becoming very popular.
And how many of those actually go to expiration versus actually being sold off before the end of day?
No, we think like a zero-day option could lose all its value by the time the market moves away from it, because it's practically
priced out.
Yeah, it's really, it has no value if it really moves in, but also it can gain substantial value if it goes in the money. So it's like a lottery ticket that people are trying to bet. So I would say more than 75% expire worthless because people are losing money. But those who make it, they make a killing. So you could make, we have seen some of the S&P are on QQQ, ETF, etc. 2-3 million becoming 23 million in this between April 2nd and in these markets. People have turned smaller amounts into huge
amounts of money
just by trading these options. Actually, you could see them on the screen. So it's pretty incredible. I mean, from April 2nd, Liberation Day, we have seen the option volume on S&P markets and also on the crypto option side has exploded.
Wow. Yeah, no, and I think you again, sort of from your background, how did you actually get into crypto, right? You started off in academia. You shared a lot of the works that you've done in academia with me and a lot of the books. You've written number of books as well and contributed to a number of papers as well, right?
That's right, yes. So
how did you get into crypto? What was that journey?
I wanted to be in academia when I did my PhD in the machine learning and AI area. So after my PhD, I got into financial industry I was in Zurich and I got offered many roles. So I was always interested in probability and mathematics. So I got into fixed income trading, worked with many names. And in 2008, around the credit crisis time, I really understood the deep liquidity that the currency and the bond markets offer. So I was very attracted to that. I was interested in equities, but I was really attracted with how dollar yen moved, dollar Swiss moved, how gold moved during the credit crisis, or bond yield or CDS moved. And I was very fortunate to be in teams where I picked up some knowledge, and I thought of trying my luck in the currency and the bond options area. So I founded the firm to trade currency bond options, and that's how the G20 Group's first company was born. And immediately after 2 years, we had a big Greek government bond crisis where we saw basically the German government bond yields but trading in line with the Greek government bond yields, only to see after 6 months Greek almost close to default. And I think we did pretty well from that area onwards in terms of the euro dollar and then various other currency pairs, and the firm has grown from that period. And then also, of course, we we were fortunate that very talented people joined the team, and then we grew in that area. So 2016, I think the main we knew about the Bitcoin in 2015. We haven't done much with it. I think 2016 was really the year where India demonetized the rupee, and Bitcoin started trading around $170 to $200 at a premium in onshore in India. And then we actually understood that a very solid democratic country probably follows the law. I mean, still long way to grow. It's doing pretty well, I must say. India right now has a lot of potential to grow. Could actually demonetize its own national currency. This is a risk for many countries can fall into the same crisis, like many in Africa, many in South America. We have devaluation. We have I come from the currencies background. What I know is hyperinflation. And we have seen how Turkish lira has been impacted with the various monetary policies that they have. Zimbabwe, Venezuela, many of the countries with poor fiscal policies to high inflation, and then political situation as well. Like if you take countries in Lebanon or in Africa, many of them, there is no real proper functioning central bank. So I think that's where we understood that, okay, Bitcoin probably is more a monetary hedge. It could also be an asset that could be used for expansion of M2 money base. We didn't see it so much as a payment because it was so expensive to use it. And currencies, like if we in the currencies world, we saw there are a lot of solutions that could become fintech, and payment wise, that was not so attractive value proposition when we saw Bitcoin, but more in terms of like a big money that you can move, also kind of an inflation hedge. But I wasn't sold so much on the inflation hedge area in 2016. I thought like, okay, this is really great, and can we trade this? And then we started trading it in 2016 and 17, and that's how we got into crypto. So I think it took us like some time to understand. So 2018, so we weren't definitely, I was not in very early or nothing like that at all. So we came in pretty late. 2016 after onwards, there were many phenomenal people that were there, including you, Stefan. I think you were there 2012 and 13. You were one of the early pioneers yourself. So we were very late, but I think we understood that how it could evolve into a proper liquid functioning asset. And then we understood that. And then that's how we got into crypto. And then we grew with the time on doing the right things in the right way. So
when I got in, to your point, I got in, payments were really easy. It was fast, it was super cheap, it was really around the world. You could do payments with Bitcoin.Network, right? And the Bitcoin coin itself. And so, and then it just got it heavy and congested, a lot more, the restrictions on the block size, et cetera, and that's where that changed. And so, but ultimately, we met, I can't remember, it seems like long, back in 2020, sort of around that 21, and you've really taken G20 significantly down the crypto path, right? I mean, it's like you've been working with lots of interesting protocols.
That's right.
You've expanded globally. How has this differed from, sort of what you've seen? Do you see that crypto is here to stay? It's the new currency. It's the new utility. New FX is going to be all of the swaps between these different currencies, and no longer between the Venezuela dollar and the Zimbabwe dollar and the Swiss franc or do you see them all playing out?
I think I am in the school where I see there is definitely central banks will not let their influence go.
Okay.
So why do I say that? Is just take this year gold price. Gold price is clearly moved by central bank inflow. They buy thousands of tons of gold every year. They want to do that. SNB has clearly said they don't see a need for Bitcoin to be a reserve asset. Now, some administration that is crypto friendly may say, yes, we are going to be there, but I do not see that the entire world unanimously accepting Bitcoin already now to have a reserve asset. Because why do they do it? Because probably gold is easy to acquire. Gold is easy to store, whereas Bitcoin, they may be afraid that they may actually cause a price spike if they try to acquire. So this could be the first reason. And secondly, they don't have a mandate actually from the governments. Most of the central banks have a mandate.
Yeah.
Bitcoin is not yet the mandate. Some small countries add our corporate balance sheet,
Yeah.
but if you really see all the top 500 companies, they all report the earnings in the currency
their
of the
local currencies.
local currency
Yeah.
of the country,
Yeah.
right?
Yeah.
Like, you take Switzerland, it's
Yeah.
the index is traded in Swiss
Francs,
franc.
yeah.
So if your stock index is traded in Swiss franc, you are most likely expected to be reported your earnings in the Swiss franc, right? Or if you're in dollar or anything.
Yeah.
So we are in. So we believe that some people will not believe governments because government trust is all time low.
Yeah.
They don't believe it. They think that they're all corrupt. They all are here to print money. They are all bust or anything. So they will not believe. So they will continue to use Bitcoin, some of the other non-sovereign assets like gold.
Yeah.
Maybe other ones to hold their wealth. So
Yeah.
this is great. So some people are saying, look, you know what? We like Bitcoin, but we don't want 100% to own it.
Yeah.
We may own only 1% to 5%.
Yeah.
We own the rest stocks or anything.
Yeah.
So I think we'll have both worlds will coexist.
Yeah.
But what's interesting that the change that we have seen is the cross-border payment using stablecoins, where you can settle either through a open network or through two different networks. Like, you can transfer between networks, or you can have a big banking network like JP Morgan coming up with the JPM coin, where you don't even have to actually transfer between between two places. You actually can seamlessly do that. This seems to be quite likely possible, rather than Bitcoin replacing all the payments. So use Bitcoin for probably like gold, because gold, you don't transfer to pay somebody in gold. You hold gold. You use gold in a crisis. Use gold to sell, to buy other assets. That's what's going to happen. So if you apply the same analogy, in a crisis situation, gold goes high. In a normal situation, you sell gold, you're going to risk assets like stocks. So you see Bitcoin going high in a difficult monetary situation or in a crisis, but then you sell a little bit of Bitcoin, you buy other altcoins if you are liking it or you're not doing it. So this is quite likely how we see how the world is going to evolve. Central banks are going to basically either issue sovereign coins, sovereign currencies of their own CBDCs like euro is
trying
they really want to do euro.
Yeah.
Some of them don't want to do it. So for example, some of them say, look, Swiss National Bank, some of the members have voiced their opinion that having a sovereign CBDC is actually not good in terms of the privacy. So they actually are in favor of currency notes where its privacy is protected. So we will see both worlds where some of the countries will issue CBDCs, some of the countries will not issue CBDCs, but definitely we will be in a world where you will have crypto, you will have fiat, that both will be remaining there. I don't see any of them replacing other.
Same. I think we see the same thing. I mean, it's like Barnes and Noble still exists, right? And Border Books versus Amazon Books, right? So you have both assets. You do have the physical and you have the digital as well, and you'll see the same in the currencies. Stablecoins is a big market, right? We're seeing a stablecoin emergence and boom, and now with the Genius Act in the US, the bill is to allow and enable local banks holding treasuries to mint their own stablecoins.
That's right.
And so if you look at that, ultimately you've issued a treasury to print more dollars, and now you've got those same treasuries can issue new stable coins. And it's no longer a central bank that's issuing the stable coins. It can be any bank that issues a stable coin as long as it's backed by treasuries. How do you see that? I mean, the stablecoin market's going to boom as a result out of that.
I think it's a very good question. It's like currency, that the trade war has a couple of impacts. So I would try to answer from this perspective where if you are actually, applying a very high tariff to various countries, some of them can retaliate by saying, listen, we're not going to buy your government bonds, we're going to buy gold. We're going to buy, a non-US government bonds. Okay, so they can do that. And then now, so eventually the independence of the global system is built on US governments actually sells the dollars, gives the dollars, they take the goods, and then so you have now the dollars, and then you recycle that back into debt into US government bonds. You hold it, right? This is what we have seen. And now some of these big holders may not be doing it. Most likely China, for example. They may say, okay, look, why would they do that? We have seen the confiscation of Russian assets in the war, which I think has caused a lot of fear among many central banks, and then they started buying gold. And this has led to gold going through where we are almost $3,400 and about 3,000. So some of if you are actually not a really friend of US, you will be afraid, hey, if I would do something, maybe they actually block my reserves, and they can just say that, look, we don't want you to hold our currency. So they are looking at gold. They may be looking at other alternatives. So now how does US actually find enough demand during these treasury auctions? So it's through actually crypto. So crypto, basically, some of these crypto companies are the biggest holders of. Warren Buffett owns 4.3% of entire treasury market, Berkshire Hathaway. Can you imagine that? 4.3% of the entire US treasury market is owned by Berkshire Hathaway. It's crazy, right? So some of these big names are the debt buyers. So I think crypto is a great way for US administration to find new buyers of the US government
of the treasuries, government treasuries.
Government treasuries. So that's why they're very much in favor of. It's not that they find it's really advantageous to find domestic banks holding stable coins and stable coins that are backed by treasury. So it's pretty much clear that they would not allow any stable coins that are not backed by treasuries. That's pretty given, right?
And also you've got a locked-in market, right? So if I've got stable coins in circulation, I need to make sure I re-up my treasury positions.
So the more people actually buy you a stable coin, you have to back it with more treasuries. I think that's what it is. So it's kind of creates a new market that is basically crypto speculation and everything in stable coins. You hold stable coin, indirectly the stable coin that is minted is backed by the US government bond. And then that's great for the US government. So I think crypto is an amazing area where if the stablecoin market goes to 1 trillion, you almost have 1 trillion debt basically sold to the issuers of the stablecoin.
So if you were to now take a position that you wanted to buy options or you wanted to buy an ETF on stablecoins because stablecoin markets are going to go up, how would you go about doing that?
That's a very good question.
Because I know stablecoin market cap's going to go up.
So sure, stablecoin companies like Circle, they make the money through the interest that they receive by minting stablecoins, right? So
and also on the treasuries that they hold, right?
Exactly. On the treasuries they hold, or some of the bid offer spread, etc., or the market activities or fees they charge, etc. But majority of the money is through interest rate. So now we say 4.5 is the 4.25
current market rate.
4.5 is the range. Now we know interest rates are going to go down. Let's say the interest rates go to 0. What happens to Circle's revenue? They're going to go lower, right? So who are the beneficiaries of stablecoin issuance? And I think if you really look at Circle recently, filed for an IPO, and then if you look at their SEC filing, they pay $1 billion to Coinbase, right? So I would go too far to say Coinbase is a very good way to bet on stablecoin
overall crypto
growth because they has a diversified revenue streams and they make money. So independent of that. So I think Coinbase is a more safer bet than buying the Circle IPO. I'm not saying Circle is bad. In a declining interest rate environment, I would like to hear how they will expand and then make money. So that's one thing. Same with Kraken, if they would go to IPO, could also be attractive because they are more or less could be interested to make money. If Ripple would go to IPO stock, pretty attractive because they did the Hidden Road acquisition, and then they're more likely to use the Ripple XRP, the RUSD stable coin, and then Hidden Road clears around 3 trillion through their prime services every year. So that's where they want to grow their business. So if you see, all the IPO companies have some kind of a stablecoin angle, which is very attractive. Again, going back to US government bond debt is the fueling growth of all of that. So So what does it tell us is crypto basically is a derivative of the TradFi packaged with the technology layer, which actually does, speculation, that transfers pay all the money, then US government bond debt, US debt basically fuels revenues of the Tether and everybody, which hold the US government bond. So I think, so that's why, bond markets are so important to crypto and interest rate, from the Fed, because this practically dictates the fortunes of most of the companies that are going to IPO. But also lower interest rates are good for crypto because it expands the monetary base. So I would say that's why G20 is in an excellent position to help many protocol projects and founders and anybody, because we come from the fixed income and currency background. So I think it's these intertwined crypto and TradFi is what going to be a big winning formula going forward. And also we are seeing very serious people, including many people entering crypto. I think this is a very good sign to actually say that we are very optimistic on the sector. Of course, every sector has good and bad actors thereout, but I think as the sector evolves and matures, you see more and more good people with really good intentions coming in, and I'm very optimistic that it will evolve into a better stage as with the time progresses.
Yeah, no, thanks a lot, Nag. I mean, it was amazing. I mean, lots of insights, lots of background, lots of context. But I know we've got a lot covered. I hope all of you can digest all of this because there's a lot to cover. I'm just super intrigued. You mentioned JPM coin. You mentioned your CBDCs. You've mentioned, we talked about Ripple dollar, Coinbase dollar, Tether dollar. All of those are stable coins. And all of those we know, and you've just mentioned they're all going to grow. How can I bet on that growth? What product would we have to create to allow that to happen?
So I think you should just become a shareholder of any of these companies.
Any of those companies.
Any of those companies that would really grow.
Yeah.
I think that's how you would. I would say you should bet on.
Yeah.
Because issuing a stable coin, growing it is not anymore a small ask. It's a big task.
It's a big task.
So only very large names with proper balance sheet and also really having a proper planning can only do that. So I think a lot of small stable coins will simply die out or they just become irrelevant. And some of the big names, winner takes it all. So I think that's where we see. You could also practically bet on some of the DeFi platforms that may be using both USDC is very crypto DeFi native. Tether is more centralized venue friendly. So some of those platforms which could offer some kind of a hybrid service to that, maybe investing in them. Some of the platforms are issuing stable coins, like you want to issue a emerging market Brazil real stable coin or Chinese yuan stable coin, peso stable coin. Because emerging markets are very high interest rate. It's all about the interest rate game. So you want to issue a stable coin. You don't want to pass all the interest to the end consumer because it's probably not allowed with regulation because you may be violating Securities Act in some countries. You make it transfer easy, but you keep the interest rate as an issuer. That's you make the money.
That's how you make the money.
So the platforms that would allow you to issue these stable coins could be an attractive. That's where you should look at it. However, you have to be very careful on how to invest because everybody is looking into this area, which means 75% projects are going to fail. So it's very important to differentiate which is going to survive, which is going to fail, and so to do the homework is extremely important.
Thank you. You heard it here first, on the chain, off the record. Thank you, everybody. And
thank you, Stefan.
Where can people follow you? Do they go to G20 website, G20 Twitter?
I mean, we don't have really big social media or anything. I do write once in a while in LinkedIn. But I think this is the reason why I came here on your show. We don't have a big social media presence or anything. You can always reach out to me. You know where to find us. So I think we share our thoughts exclusively to our partners and people that we closely work with. We don't have a big social media presence, and this is we don't really do much of these shows. I came because you're a friend, and we really like you, and thank you so much for inviting us.
No, so there you go. If you're in the know, you know, and here is somebody that knows, and if you know Dr. Nag, then thank you.
Thank you, Stefan.
Lots of insights. Bye.